welcome to the Deep Dive. Today we're digging into a really key question, I think, based on some recent analyses of China's economy.
Right.
Basically, can it actually, sustain itself economically without the huge American consumer market?
A massive question.
Yeah, we've been looking through some excerpts that examine China's current situation, especially with all the tariffs and trade restrictions still ongoing with the U.S. So our aim here really is to try and understand the potential vulnerabilities that these particular sources are highlighting in China's economic model.
Exactly. We're trying to move past just the headlines about, the latest trade spat.
Right.
And look at something maybe more fundamental, this deep interdependence and, where things might potentially break down between these two economic giants.
Okay.
The core argument we're unpacking suggests China's manufacturing engine might be facing some serious challenges.
Okay, so one thing that really stood out in the reading was this idea of China building up this absolutely enormous manufacturing capacity, right? Primarily aimed at exports. And for ages, the U.S. was customer number one.
The biggest buyer.
And the analogy they used, which I thought was quite striking, was like a mega mall with no parking lot.
Right, I remember that.
Huge capacity to produce, but maybe not enough customers at home if those U.S. orders dry up significantly.
And the scale is just immense. The analysis really highlights that. And now, as U.S. demand is, let's say, softening, partly due to tariffs, partly companies just looking elsewhere,
Diversifying, yeah.
we're reportedly seeing real effects inside China. Things like factories pausing production lines,
Wow.
shipments getting delayed, and, job cuts too, unfortunately.
That sounds like a pretty difficult situation. And I guess the competition for whatever global demand is left must be getting fierce.
That's what the source suggests. It used a pretty strong word. Cannibalizing.
Right, I saw that.
The idea being that without that huge U.S. outlet, Chinese exporters are potentially just, aggressively undercutting each other to grab pieces of a much smaller global pie.
Which you have to assume isn't sustainable in the long run.
Probably not. And this brings us to a really critical point the analysis raises. The limits of China's own domestic market. Can it really absorb all this production? The sources argue, well, probably not fully. They point to a few things. Average wages are generally lower than in the U.S.
Yeah.
There tends to be a higher savings rate, maybe cultural factors, different spending habits overall.
So the idea that Chinese consumers could just step in and buy everything the U.S. used to, it's maybe not that simple.
It's what this analysis challenges, yeah. And think about it, trying to shift an entire economy built for export inward, that's a huge undertaking.
Especially now, right, with reports of rising youth unemployment, the property market looking shaky. That doesn't exactly scream consumer boon.
Precisely. Those factors don't help boost confidence or spending. The article even used quite dramatic language, suggesting it could be a bloodbath if all that manufacturing suddenly had to rely only on domestic buyers.
That's a stark image. But it underlines the potential scale of the problem they're describing.
It does. And if you connect this back to the U.S. tariffs and trade policy,
Right.
The argument presented in this analysis is that these aren't just like random trade moves.
Right.
The suggestion is they're actually hitting a fundamental vulnerability in China's model, that deep reliance on the U.S. market specifically.
So kind of a deliberate pressure point.
The source frames it almost as a potential strategic chokehold, that these measures might be designed to pressure China by limiting access to its most crucial customer base.
And it was interesting that the article pointed out the Chinese government's response to the tariffs has been perhaps relatively cautious.
It didn't at that.
Which the analysis implies might suggest they are aware of this vulnerability. Maybe their hands are tied to some extent in how hard they can push back because of this dependency.
It certainly raises big questions, doesn't it, about the long-term wisdom of an economic strategy being so heavily reliant on, essentially one huge external market, especially when global politics are shifting.
Yeah.
The material we've looked at today definitely puts forward a compelling argument about the potential risks baked into that model.
Okay, so just to sum up our deep dive here, the analysis we reviewed suggests China's massive manufacturing sector is potentially significantly reliant on U.S. consumer demand.
Right.
And that making the switch to an economy driven mainly by its own domestic consumption faces some really quite significant obstacles.
That's the core takeaway from these sources, yes. Which leaves us and you, our listeners, with a final thought to chew on.
Okay.
Considering China does have this incredible manufacturing infrastructure already built, What kind of broader long-term shifts might we see in the global economy if its dependence on any single large market, like the U.S., actually decreases?
Yeah. What new trade patterns or maybe economic priorities could emerge globally from that kind of shift? Something to think about.